Happy Friday, everyone. It's 8:03 a.m. Chicago time, 9:03 Eastern on Friday, the 3rd of August, 2018. Thanks for joining me. Hopefully, you're hearing me loud and clear and everything is in order, in Ordnung, as they say in German. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So this morning, the market sentiment is slightly to risk allocation. We have a mixed bag, really. The DAX is up 60 points. Remember, yesterday it was way down by the time we opened. But we also have the notes up 3.5 ticks, the bonds up 7 ticks. The Euro Bund, the German 10-year note, up 51 ticks. Gold is up, Japanese yen up. Those are all safety items, and they're up. The Dow Jones is down 11 points. Crude is down 3 cents, and so on and so forth. The Russell is the laggard today. Small caps down 1.2 points. Okay, so mixed. We did extend the range up in the S&P overnight to 2836. The low is 2824.75. It is non-farm payroll Friday. This is a big economic release day, and it's expected. Traditionally, we get a move pre-market, and in general, we tend to quiet down quite early. At the Board of Trade, when I used to go down and visit the floor, you'd see the floor clear out by 10:30 Central, 11:30 Eastern or so. At the latest, noon Eastern, it starts to get quiet. In any case, let's take a look at what else is on deck for today. We do have U.S. Services PMI final for July at 9:45 Eastern. We have ISM non-manufacturing at 10 Eastern. The release was off. We expected, where are we? Getting ahead of myself here. Looks like, where's my feed? There it is. The non-farm payroll release came in at 157,000 versus 193. Fed funds did not move all that much. Half a tick, I think, on the adjustment. The market's still pricing in a rate hike in September, and that's what it's all about. It's Fed crack. The market's looking for its next fix. Let's switch gears and take a look at what we expected yesterday, which was not anywhere near what actually happened. Remember, the main play yesterday was responsive buying. We're opening in a gap, and the expectation is for us to get back up above. And I was very modest. I was looking forward to test 2808 and then hold steady after closing the gap. But we ended up having a trend up day, pretty strong. Secondary scenario was not all that great. Okay, so here's what actually happened. There it is, Rocket Launch, I should say, launch. Very quiet open auction out of range, and I saw two very clear opportunities. Those of you who are at Convergent got the RTH recap, the ES recap for yesterday. Two main points. The initial key opportunity is the break higher with a pullback to mid, test the prior low right there, the green line, test the prior close, test the point of control, which it did to a tick. Remember, 28.1250. 28.1250 has been in play for a couple weeks now. And so that finishes that trade. And then it rotates down. This was the biggest down rotation of the day, right here. Pulls back to the prior low, which is right on top of the mid again, another opportunity, and it starts to shift up. Once it gets above the IB for the second time, the rotations down were very poor. You can see them down below. The down rotations are just so weak, and most of the power is to the upside. You can see the up rotations. This chart right here shows the harmonic rotation, or the rotations. So these numbers in the white boxes are reflected down here. It's just a rotation size. The rotation size tells me what side is gaining in price with every turn. Okay, so that's what we saw. A trend up day. The profile, very clean, clear, trend up, classic point of control at the high of the day. As the market reaches its conclusion for the day, the opposing force usually gets in to bounce out its positions. So that results in us trading a lot near the top. Because we traded a lot near the top, now we expect the market to continue to drift up. This morning, a lot of chatter from China. That is about tariffs. They're imposing $60 billion of tariffs on agricultural products from the U.S. The SOC for that is 28.34, right up here. Market dropped quickly on that news. And then the non-farm payrolls came in, and the SOC for that is 28.3150. Okay. So that's what things looked like yesterday. Let's take a quick look at the overnight session, what it has done. So the story, or the narrative, or context continues. We reopen. We extend up immediately. This is expected. And then we pull right back, but above the closing swing low. The closing swing is 23.5. The low is 24.75. And then we push up. We sell off slightly in here on China, and then we sell off some more right here on non-farm payrolls, and we're inside. We're now trading inside of that bar. I mean, it's incredibly lazy right now, the trade, if you look at what it has done. Okay, so here's China at 7 a.m. Chicago time. Here's non-farm payrolls. And we've just been stuck inside of the non-farm payroll high and non-farm payroll low. And we're just sitting in between here. So balancing, likely to break away from this area at some point. What is this? Okay. So that's what we have. The overnight volume is relatively high. And we have pretty much a balanced profile in the overnight session while we wait for the non-farm payrolls, except for this run up in the late European session. One thing I want to do, take a moment and talk about the big picture. So it's Friday. What have we accomplished this week? This week is comprised of these 4 days. We popped up last week from 28.18 to 28.49. We fell back through at the end of the week. We fell some more this week. We went to the point of control. We held the point of control, and we retested the point of control again. We gapped below it, and then we pushed up yesterday. So we're continuing to trade in this distribution. To me, this looks like 28.50 is incomplete, and we are likely to test out this low volume zone that we left behind from late January. So it's not, sellers are not really accomplishing much, despite the selling day that we had last Friday, and so on. It's quickly, those selling days are quickly taken back. The buyers are definitely still in control. One-time framing up has ended, but still what we have here is like a megaphone kind of formation. It's balancing with wider and wider rotations. So that's what we're seeing. We're seeing the both sides battling it out and protecting this. The sellers protecting 2850, buyers protecting 2800. So we see a lot of interest once those bands get stretched. We get a lot of interest from the opposing force, and that's been the case for some time. Now let's move on to today's plans. Remember, it's non-farm payroll Friday, and it's likely to get pretty darn quiet pretty darn early. Before we do that, though, I do need you to do something for me. I'd like you to hit the like button. If you're logged into your Google Gmail account or whatever, just go click the YouTube button and press the thumbs up for me, please. So the primary scenario, oh, by the way, hopefully many of you attended yesterday's webinar with Futures.io. The recording should be out today. The webinar was about how do I know if I'm on the right track as a trader. Do I fight or do I quit? We're opening on the edge of yesterday's range, 28.2950. This is not where I expected us to open. I expected us to open out of range, clearly out of range, but we are on the edge. The open is expected to be an open auction. Open auction. I'm expecting it to test lower into yesterday's point of control. I'm expecting a burst out, and I'm expecting a retest of 28.35, consolidation, and then push up and then balance. So I'm expecting for today, I'm expecting a profile that's thin at the top, larger distribution, and a third distribution down below. That's the primary scenario. Okay, that we continue yesterday's trend. So I expect us to take out the high on RTH. Statistically, that's what's most likely. The secondary scenario, open, test up, drive down or impulse down, consolidate, and then start to move through. And I'm looking for a retest of 28.18, consolidate, and then just hold steady there. On this profile, I'm expecting two distributions. One that balances at the bottom and a small one at the top as it moves away. Those are the two main ideas today. How do I trade those? If the market opens in an open auction, I'm sitting on my hands. There's nothing for me to do. There's no indication on who's in control. So there's no point in me acting. But if I get the impulse down, that's scenario 2, or the impulse up, scenario 1, then I'm going to look to trade from that direction. So I'm looking for pullbacks to trade against, just like we saw yesterday. So here, those are the two scenarios, but this is what I'm looking for. If that happens, I'm looking for this. From a practical hard right edge kind of trade, what things are going to look like for scenario 1, let's imagine that we opened at an open auction just above yesterday's high. I'm looking for it to consolidate in an open auction, and then I'm looking for it to have an impulse. So I cannot trade the impulse in general, but I'm lucky if I catch it. Can't trade the impulse. Okay, there's the impulse up. So you see 5.5 point rotation there from 96.5 to 28.02. What I do trade is this. This is what I'm looking for. This is where I'm engaging with the market. So what I'm looking for here is for it to drop back to a defined area And then for the order flow, this stuff here, to start showing signs of what? I'm looking for it to show signs of sellers slowing down. So if we go to yesterday's setup, where are we? Here we go. So yesterday's setup, impulse is up. There. So as it comes back down, I'm looking for, as it prints on the bid, I'm looking for absorption to take place. I'm looking for a lot of interaction, and then I'm looking for it to get very thin at the bottom. And that tells me that sellers are not able to maintain pressure, and then it gives me the opportunity to get long from there. You have to read that very quickly. It takes a lot of practice, but that's basically what we're looking for scenario one. Similar to yesterday, I'm trying to show you an example of what it would look like to have it, to have an open auction that tests down, impulses up, and pulls back. I'm looking for that pullback. I'm not looking to trade this impulse. That's my point. Okay. So, yes, I'm still using Bookmap. That's my execution platform right there. All right, that's all I had for you. Just please remember to hit the like button before you leave today. Good luck. And oh, by the way, next week, I'm gone. There will not be a Trader Bite all week. It's a break for you. It's from my voice. It's a break for me. But I'll be traveling on my annual global trip. And I'll be back the Monday after, the August 27th. So I'll be gone from the 6th through the end of the week, and I'll be back the following Monday. Okay? Actually, not the Monday the 26th. What am I talking about? Monday the 13th. Monday the 13th. Okay? I'll catch you soon. Convergent Traders, you have a video that's going to be released next week on partnering, finding a trading partner, and on what to do with them as far as journaling and accountability and stuff. So look for that video next Thursday. Take care.